Talk about an important data point that came in on Friday. India's GDP, what we saw for Q1, came in much higher than expected at 7.8%. The CNBC-TV18 poll was expecting a growth of 6.8%. Latha is joining in with us to give us the fine print on this one. Latha, good morning. This number is so exciting. What are we watching out for now? What were the factors here that came in?
Well, actually, we must know how GDP is collected. The NSO, National Statistics Organization, collects GDP at current prices. So, at today's prices, the nominal GDP has worked out at 8.8%. And then they take out the inflation part and get the real GDP, which is 7.8. Now, how do you deflate it? You use a mix of WPI and CPI. That's what the NSO does. It takes 60% WPI and 40% of CPI and deflates it. Now, WPI in the last, April, May, June, was 0.28%. It was even minus in June. Because of this very low deflator, the NSO has deflated by only 1%. 8.8 has become 7.8. But India's GDP actually comprises a large component of services. Services contribute 66%, and we don't have a services deflator. Other countries have PPI, Producer Price Index, so they have a services deflator. We don't have. So at a time when WPI is very low, like minus, our real GDP tends to look very good. Now, having said that there is an overstatement, we have to admit that the numbers are very good. Even if you looked at nominal GDP, my poll threw up 8%. We have done 8.8. So it is better than expected. And if you looked at only the services category, that's grown by 9.3. The government services part has grown by 9.8. It's called public administration, etc. That's because the government capex was front-loaded. Government capex grew by 52% if you looked at first quarter over previous first quarter. So there is a lot of positive news, but there is a bit of overstatement.
Okay, positive news, a bit of an overstatement. But Latha, thank you so much for explaining us in details, how this works as well, but keeping an eye out on any reaction that comes in on that front on the market.